Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities, oil and government bond yields tumbled last week after President Trump's higher than expected tariffs kicked off a global trade war, raising risks of a global growth slowdown. Following this, China announced a 34% retaliatory tariff on US imports, sending global markets in a tailspin over the last 2 days of the week. In US, most equity indices recorded their sharpest weekly decline since the pandemic of 2020. The S&P 500 fell 9%, Dow Jones fell 8%, while the tech-heavy Nasdaq Composite fell around 10% for the week. Asian equities recorded a broad-based decline, dragged down by Singapore and Korea falling 5%, while Indonesia, Malaysia, Philippines, Hong Kong and China A-shares fell around 1%. Back home, the Nifty index fell 2.6% over the holiday truncated week amid rising growth concerns from the impact of US tariffs and foreign investor outflows. Broader markets outperformed the Nifty index, with the Nifty mid-cap index falling 2%, while the small-cap index was down 2.6% for the week. Among sectors, FMCG, utilities and telecom recorded positive gains for the week, with a gain of around 0.4 to 4%, while information technology led the losers with a cut of around 9.1% over the week. The Indian fixed income market had another strong week, with bond yields falling across the curve, driven by the announcement of additional INR 800 billion of OMO purchases by the RBI in the month of April, and increasing expectations of a deeper RBI policy easing cycle amid rising risks to growth on sweeping US tariffs. During the week, the 10-year Indian government bond yield fell 11 basis points to 6.47%, while the 3-year and 5-year bond yields fell 16 basis points and 14 basis points respectively. The Brent crude oil witnessed severe selling pressure on Friday, extending its weekly decline to 8% after China retaliated with fresh tariffs in response to US President Donald Trump's levies on the Asian nation. Brent crude oil futures dived $5.7 or 8.2% to $64.6 a barrel. The INR rose 0.2% against the US dollar to close at a YTD high of 85.5 per dollar, supported by weaker US dollar, falling crude oil prices and lower US bond yields. Coming to the macro updates for the week, the first was on India's manufacturing PMI, which rose to 58.1 in the month of March 2025, higher than the February's reading of 56.3 and the highest level since July of 2024. Both new orders and output rose the most in 8 months, and buying levels notched their highest level in 7 months. On prices, input cost inflation reached a 3-month high despite being below its average. That said, prices charged rose the least in a year. Finally, sentiment remained fairly optimistic, supported by demand conditions, better consumer relations, and projects pending approval. The second data was on India's services PMI, which eased to 58.5 in March of 2025 from the previous month's reading of 59. Output continued to grow, supported by buoyant underlying demand and ongoing increases in new business. On the price front, input cost inflation eased to a 5-month low. As a result, output cost inflation slowed to its weakest level since September of 2021 amid competitive pressures. Looking ahead, business sentiment weakened to a 7-month low and fell below its long-run average amid heightened competition. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.